Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So it's time to update our view on cryptocurrencies. And despite that we have some patterns on the lower time frame, on the daily, on intraday charts, it was not very impressive performance in last week, as mostly market stands flat and showing no significant action. But even there, we could find something useful for understanding of the overall processes and general situation that we have here. But by my personal opinion, the major thing and major pattern that we have, it stands on the weekly chart. And this pattern, as you can see on the chart, is the pennant. This pennant is very informative for medium-term perspective. It's just because pennant is a continuation pattern and usually forms when the market takes the pause on some trend, suggesting that once this pause will be over, market should keep going lower. Keep going in the same direction as it was before the pennant. Currently, you can see what we have. Drop, forming the pennant. On the lower time frame, on the daily, it will look like takes the shape of the triangle. But here is the pennant. And it's suggesting downward continuation, which means that's really important. We have some other tools that we have discussed on the monthly chart. We're explaining the reasons why we suggest the downward action here is also as well as divergence, for instance. It's also just taking out of these lows. And target we have below these lows actually on the daily charts, 26, as you know, suggesting also downward continuation. And in general, hopefully, guys, you are watching not only these videos on the Bitcoin, but also reading out our analysis on the Forex market, on the gold market, because there we explain a lot of important things that makes relation to the cryptocurrency as well. In particular speaking, if keep it simple, we have the ultimate levels of the inflation, significant inflation, that's highest since the 80s in the United States. And Fed is trying to rising rates currently, and this is actually double impact on the cryptocurrencies. First of all, it's just because cryptos are not generating any interest, and that's why they can't just provide something to investors to protect against inflation, at least some interest. Second, rising of the interest rates, this will be another headwind for Bitcoin. It's just because it supports its rivals, the bonds. And even stock markets with a high dividend yield also might be considered as a better investing opportunity. Some protective shares such as the utilities, for example, real estate market that pay some dividends. So all these moments makes put Bitcoin in a tricky place that actually you can't find the reason why you should buy it right now. So what the performance it could provide you, why Bitcoin could rise in the current situation. So, and that is really major concern with the suggesting and trying to understand a possible reversal or something of that sort here. Besides, on the inside of the pennant, as we already mentioned last week, well, here we have first of all the evening star pattern. As you can see, three candles that we have here, and these spikes up just suggest that any rally that Bitcoin is trying to make previously was sold off by the new sellers to step in, trying to close the positions at the more or less better price. So once market hits the 45, sellers step in and push price lower to the 38. And that repeats 2 weeks in a row. Even inflow on Russian money haven't supported the Bitcoin, which was easily absorbed by the sellers and push price lower. So this pattern makes me think that we should get downward continuation here. So at least currently, at this point, this is the major scenario for us. So yes, if situation starts changing, market form bullish reversal swing, for example, moving above the previous top, breaking this confidence resistance, that could change the thing. But at this moment, on longer term, I do not see any good reasons for taking the long position. On the lower time frame, on the daily, mostly everything stands the same. As you can see, the grabbers has been formed are still valid. Besides, we have the 3 grabbers in a row actually. This first one, second, this minor is third one, and all of them suggest drop below these lows. But these lows are very important for performance of the intraday charts, and if these lows will be taken out, this might open road for a deeper action, at least back to the lows of the 35, or as we suggest, it might be acceleration to the OP as well. Just because this is major target on the daily chart, and this flat standing, actually stands more in favor of downward continuation. As here some signs of the bearish dynamic pressure exist. So why these lows is very important? Because if you take a look at the 4-hour time frame chart, you will see that this is C point of the ABCD pattern. And if it will be taken out, market will drop below that, the ABCD pattern will be cancelled. So we can't count anymore on some upward continuation to the XOP or something of that sort. So that will be breakout. Second, it might be action to 3450 area, which is actually equal ABCD target. But once market will stand here, take a look, it will be almost at the previous lows. And the chance of the Russian range trying to attempt and break these lows will significantly increase in this case. So this downward action and taking out of these lows could trigger some chain bearish reaction that could lead market to go lower. And if you even take a look at the performance on the hourly chart, let's take a look how it's standing. So with this upward action where the grabbers have been formed, this was easily returned back to the 618 level, and since then market just showing noise around the 618 level. So no attempt to go higher. In general, this performance is also very difficult to call as something bullish. So in general, even the performance of the market here, it's a bit, it's difficult to call it as a preparation for reversal. Mostly it looks like the attempts to stay at support. So market trying to stay here, hook up for this all actually power that it has, but it seems that it's not for a long term. Also, especially guys, keep an eye on the statement of the Fed this week. Maybe not the interest rate change, because it will be 25 points, mostly priced in, but the comments from the Jerome Powell, it might play a really big role in the performance of this week, because in assessment of the situation by the Fed, it's currently would become the driving factor, not the interest rates change per se, just because it's already, everybody knows that this will happen. But what they will tell about the future of the economy, that's really an important thing.